Welcome to the BWG Homes third quarter presentation. It's going to be presented by me, Ole Fet, the CEO of the company, and Mr. Arnt Eriksen. I'm going to take you through some highlights, then Eriksen will take the financials, and then I will come back. When it comes to the highlights for the group, it was a solid quarter for the group, improving in Sweden, continued strong performance in Watne, growth in revenues and sales. The BWG Homes AB shows increased revenues, results and sales. Continued positive development from previous quarters. Kjærnem is growing its business and new projects are launched. Operational EBITDA margin for the group at 10.8%. Market conditions. It's still a good market in Norway, though some geographical variations. Positive development in Sweden. Customers are returning to the market. Sales in Stockholm and Gothenburg areas are increasing. And the underlying demand for homes both in Norway and Sweden is still there. And then, Mr. Eriksen, the financials.
Thank you. I'll take you through the financials for the third quarter. It's another strong quarter for us. Revenues improving substantially. Came out at 899 million for the third quarter. It's an increase of 16% from a year ago. The EBITDA ended just below 100 million NOK, slightly decreased from last year, but then we should remember that last year there was a land gain in the figures of some 16 million NOK, which sort of drove up the margin a bit. The EBITDA margin for the quarter at 10.8%. It's some lower than the same year ago level. Again, from much of the same reasons, this land gain, but also for the fact that Kjærnem is now consolidated. It was not in 2012, and Kjærnem has almost a zero result for the third quarter, but still some revenue. So that explains parts of the margin drop. Cash flow from the quarter, negative, more or less in line with the same quarter last year, minus 12 million on operations. Third quarter is always a somewhat difficult quarter cash flow wise because we have this full stop in the production during the summer holidays. New orders came in at 860 million in the quarter. Again, a strong sales quarter for us, up 18% from a year ago. When we look at the accumulated figures, we see that the revenues are up in excess of 14%, so it's a very good year for us, volume-wise also. EBITDA increasing by 12% to 351 million NOK. That gives an EBITDA margin in excess of 12%, more or less in line with last year. Cash flow from operations negative, mainly driven by the first quarter development this year, where we spent quite some cash flow on the land acquisitions and in general working capital increases. So we have been recovering slowly but surely in the second quarter and to some extent in the third. 2013 has been a very strong year for us sales-wise. We have not fulfilled the year yet, but so far it looks very good, and the sales is up 16% as of the end of September. So almost 3 billion of sales for the first 9 months. Order backlog increasing to 1.8 billion NOK, increase of 12%. So order backlog has been an issue, and it has for us, and it has been a challenge to try to grow this, and we are doing that now. So we are quite confident with the order backlog. The number of units in production is just below 1,300. Some increased also that from a year ago level, in a stable state volume-wise now. Number of employees increased somewhat. When you compare to the year ago level, again, Kjærnem explained much of the deviations. 1,085 employees by the end of September. Of this, 50 is in Kjærnem. We have this slide here illustrating just how this quarter stands compared to the same quarter previous years. And basically, we see that revenues is very high. It's outperforming the last 3 years. On the EBITDA, it's a very good quarter, but last year it was somewhat higher, mainly due to this land gain which we reported then. Also, as I already mentioned, orders or sales and order backlog, these pillars shows quite a good position and good development. New orders, by far the best quarter in 2013. And the order backlog, again, in a very good shape. A bit more details about the cash flow. It has been attention put to this over the last months, also from externals. So basically what we see is that we have been able to reduce the capital spending or the working capital increases, or to limit those. So the cash flow comes out from the operations just in line with last year. The cash flow from investments is not big. We spent 22 million NOK in this quarter, mainly driven by a loan given to associated companies, which is land on the owner companies. So this gives a reduction in cash in the balance sheet of 38 million NOK, which is not a big issue for us. Land acquisitions, we spent in total just over 60 million NOK on land acquisition or land payments in the third quarter. 24 million of this is Kjærnem, which was not here last year. The remaining part of the amount is Watne and a small amount in Sweden. I think it was 3 million NOK or something. So Watne has been able to reduce their spendings on land acquisitions, and we maintain what we have said earlier in that regard, that it's a clear ambition for us to limit the cash expenditure on land. Given this development or this cash flow, the net interest-bearing debt shows a slight increase from last quarter, increase with 36 million NOK. Not a big change maybe, and not that unexpected all the time that this has been the slow part of the year, cash flow wise also. We also have here the financial position or the balance sheet figures. It's not big changes in this. We just observed that the equity ratio is still above, or actually just spot on 40%. And the land or the inventory and land portfolio is somewhat increasing still. This has partly to do also with the Kjærnem business. There are more details, of course, on this in the quarterly report. When we look at the consolidated financial figures, the IFRS figures, they are presented in this slide, and we have explained this several times before, that there are different principles for recognizing revenue, basically, under the IFRS compared to the operational figures, which we have talked about already. But again, the IFRS figure shows strong improvement in revenues, up 20% quarter by quarter. EBITDA came in at 81 million NOK, slight reduction from last year. And the margin is also ends at 9%, which is slightly down from the same quarter last year. Much again driven by both the Kjærnem effect and this land acquisition. Accumulated revenues are up 10% for the year, and the EBITDA is at 270 million NOK, just below last year's level. What drives the IFRS figures is first and foremost the delivery of houses. And we have just put in a comment on these figures that delivery volumes are sort of somewhat specified. It's an increase with 40 units for the quarter as such, and it's an increase of more than 100 units for the accumulated figures. This is mainly the explanation for the increased revenues. That was what I was going to talk about, so Ole will take over.
Yes, then I'm going to take you through the different segments in the company. Sweden first. The BWG Homes AB, we have the two brands, the Myrsjö and Smålandsvilla. Sales are definitely improving, especially in Stockholm and Gothenburg, as we mentioned before. Continued positive development in production revenues and results during the third quarter. Focus on residential projects in growing regions, as well as sales and production of single homes. We have also started 5 housing cooperatives, BRFs, during the quarter, and we have several more projects to come during 2014. We have also started the recruiting process of the CEO and the CFO, and in the meanwhile, Mr. Arnt Eriksen are appointed as acting CEO. Then the figures. Operating revenues up to 297 from 235, 26%, and as Arnt also mentioned, this is a strong raise in the sales, and that's also mainly due to the reason for why the EBITDA rises to 21 million compared with last third quarter 2012 when it was 6, and the margin from up to 6.9%. And we believe this is the scaling effect that we have talked about earlier when it comes to the factories. Larger amount of order will definitely be reflected in the EBITDA, and now we have the proof. Order intake 275 up from 231, 19% up. Order backlog 1011 up from 915 the Q3 last year. Number in units in production 221 compared with 188. And the number of employees, 377 compared with 362. Pretty strong figures from BWG Homes AB, as you can see. Kjærnem, third quarter. Kjærnem have the brand Kjærnem, and we bought it at the end of April. So these figures are included in our company from May 2013. Core business is development and of residential project. The house building performed by external contractors. So they do the project planning then. Some 70% of the projects are related to housing cooperatives segment. In the second quarter 2013, Mjølnershøjd Co-op project with all 30 units were sold, and we have also started it in the second quarter. In the third quarter, no larger cooperative project were established. Several new projects are launched for sale in this quarter. So the figure, as also Eriksen mentioned, operation revenues up from 25 to 50 million, 100%, more than 100% up. The EBITDA margin 0.200, and it's important for us to mention that this is mainly due to that we have no new project during the third quarter that we have started to build, and that's the reason for why we can see this margin. Last year it was 3 million, and we had a margin of 13.5%. Order intake 70 up from 38. Order backlog, it's strong, 214 million. Number of units in production 81 compared with 83, and the number of employees 50 compared with 59 the third quarter 2012. That's Kjernhem. And now to Norway. In Norway we have the brand Watne, and it's the Q3 for Watne I'm going to take you through. We have continued strong sales and increased revenues, still a demand for new homes, growth in house prices levels off, especially in the pressure area, in the downtown segment. Higher production cost, more resource-intensive project planning and regulation at an early stage, and somewhat softer pricing affect the result in the Q3. Order backlog at the satisfactory level. Houses are sold closer to the date of completion. This is also something that we have mentioned before, that when the market is flattened off, it seems also to be a situation that people are waiting a little bit longer before they buy houses, and that means that we start to sell houses a little bit later in the production period, closer to the completion date. We have focused on sale, cost-effective production, and reducing tied-up capital in coming projects. And that's also what Arnt mentioned. We have reduced. We don't tie up so much capital anymore as we did, especially during the first quarter this year. When it comes to the figures, operating revenues, 545 million, up from 530. EBITDA, 83 million. It's a margin of 15.1%. Last year we had 107, and as we also have mentioned before, this is mainly due to the sale we had last year, the gain from my land, and the amount were 16.5 million. Order intake, 515 million, up from 496. Order backlog, 611, compared with 714 last year. Number of units in production, 996, down from 1,033. And we have also mentioned that the production is flattened out a little bit. We don't pretend to rise so much anymore, and we think that's wise when we consider the market situation at the moment in Norway. Number of employees, 649 compared with 654 last year. And that's it when it comes to Norway. Then we have the outlook, future outlook. Improvements in the Swedish market. Market situation seems improving, also supported by increasing sales. Our operation have strong position in the single home segment, as in the housing co-ops. Production volumes are expected to increase, and we are focused on sale, cost-effective production, and a residential project in growth regions. We can see a continued demand for housing in Norway, still low interest rates and available credit facilities for customers. The last year growth in house prices and high sales rates leveling off to a more normal level. More price-sensitive market, especially in the high end, and the affordable homes segment seems less affected, and we are mainly in this affordable homes segment. We have focused on sale, market alignment, and developing less capital-intensive resident projects. And that's what we are about to say about future outlook. And then welcome back in the fourth quarter for the fourth quarter presentation, the 13th February 2014. Thank you.